Everyone comes in the market with one vision, one goal, that is to earn money. Having novice perception that market is a quick rich scheme where you trade one day and hit a lottery or jackpot, and then life becomes all rosy and all your financial troubles are terminated once and for all. This state of mind is greed and is one of the most powerful driver of our actions, but is equally dangerous. Apart from the inherent state of mind, some traders initially come into the market with the modest expectations of earning additional monthly, weekly income to support their primary income from any other professional source. But danger kicks in when in the initial trades, the trader earns profit owing to beginner's luck and starts feeling invincible, whereby the trader is completely disconnected from the realities of trading and greed quietly sets in. The trader who was initially modest in his expectations now expects the market to give bucketful of money in each and every trade, which eventually destroys traders' logical and objective thinking, in turn destroying traders' confidence in the market. Greed almost always begins with success in some trades and causes the trader to become delusional with respect to the expectations from the market, whereafter the trader does not take decisions in accordance with his trading strategy or rules, but starts expecting the market to give him only profitable trades. And if there is one universal truth about the market, it is that market does not owe anybody anything, and market does not care about what you think or expect. Trading is not a get-quick-rich scheme, and greed, more than any other mental state or emotion, destroys the most number of traders in market. Identifying greed in chaos of live market is simple yet not easy for the unversed and an inexperienced trader. As greed reflects itself in several ways the trader acts in live market. Most prominent one is when a trader punches trade without knowing his exit points. That is, his target price and his stop loss. Such trade truly reflects the mental state of greed, and it is greed which is punching the trade rather than the trader. Other example would be when the trader punches a trade with heavy volume in order to earn big in one single trade. Now this also falls under the issue of sizing, which is a topic for some other episode, as wrong sizing affects the trader's mind on deep psychological level like no other. Similarly, another example would be when the trader risks his entire or close to entire trading account in one single trade. As soon as you can identify any of your trade being taken in such scenarios, you will know that the trade has been punched, laced with greed, and you should immediately exit such trade, as a trade taken in greed destroys true judgment along with trading accounts and end most traders' journey midway in the market. The trader is unable to read the charts properly. In fact, the trader loses his ability to truly process the information market is giving via the chart. When this happens, the trader starts acting on his whims and fancies rather than his trading rules and strategy, which truly goes for a toss, and trader starts taking trades as purely gambling decisions. The market turns into a slot machine for him. Onset of greed causes the trader to seek psychological high, which triggers dopamine in the brain. Small wins in market causes dopamine surge in trader's mind, and the brain responds with excitement, adrenaline rush, increased confidence, emotional high. The trader is no longer trading only setups in accordance with his trading rules and strategies. Rather, he starts chasing the feeling itself. The trader is trading emotional excitement, anticipation of profit, validation of him being right. And this is where greed kicks in. Trading inherently is quite risky. But at this stage, the risk increases exponentially as normal profits stop feeling exciting to the trader, and the brain wants larger position size, more trades, causing overtrading, trading riskier setups, thereby risk management goes for a toss. The anticipation of earning profit causes dopamine spike, and trader's brain gets rewarded even before the money arrives. Dopamine makes traders confuse excitement with opportunity. And that is why traders can become obsessed even when they are continuously losing. The trader's mind signals more. Again, one more trade, which is nothing but greed, reflecting itself in the actions of trader. The market becomes dangerous when the brain starts craving stimulation more than consistency. The emotional rewards override logic, and impulsive decisions weaken discipline. Greed is dopamine without discipline. The biggest effect of trader lacking discipline is that he starts punching random trades with no idea of either the target price or stop loss. A trader under the effect of greed is chasing the market, and once a trader starts chasing market, it becomes a vicious cycle of trade loss trade until the trading account is completely blown. So all in all, greed becomes a self-destructive factor for the trader. The initial step which a trader should take is to first identify the root cause of his taking impulsive random trades, and then acknowledge the existence of greed as a factor influencing his trades. And only thereafter, the trader can move ahead to take effective measures to regulate his behavior and acts. The most basic way to control greed is to limit the number of trades taken in a day. A trader should imbibe this in his trading plan itself, and when it is done, it invariably effectively controls the impulsive random trading caused by greed. Further, a trader should avoid watching the chart candle by candle, having no judgment as to the correct trend, bias of market, or of the stock. This directly contributes to exponential increase in the emotional quotient, and the trader is unknowingly inviting greed to creep in. The market never moves unilaterally in one direction, rather retraces, creates pullbacks in order to sweep liquidity and create fuel for moving in the direction of bias. If the trader is watching each and every candle and reacting to each and every fluctuations made by market, it will only add more chaos and confusion in the mind of trader. Rather, the trader should take trade according to his trading plan with pre-decided stop-loss and target price, and thereafter should let the market take its course. The trader should never try to catch the entire move, as same is a fallacy, a mirage. Greed thrives on trying to catch the entire move. The best way for the trader is to define his target price before entering into the trade, and if price reaches his levels, he should exit and book his profits. As remember, trading is a game of probabilities rather than sure-shot profits. Traders should accept that leaving money on the table is normal. No trader captures every and entire move. Trying to extract the absolute top, bottom usually causes overholding and late exits, which can have two consequences, either compounding of losses or reduction of profits when the profits are not timely taken off the table. Lastly, but the most fundamental aspect which forms the very core of trading principles is to have correct and appropriate sizing during a trade. A trader which cannot control his trade size can never control greed. A trader under the influence of greed is obsessed with making maximum profits from a single trade, and in order to achieve the same, trader unconsciously punches a trade size bigger than his risk-taking capacity. It is quintessential that a trader controls his sizing, as this invariably limits greed. Though it might be simple for an experienced trader to imbibe all such steps in his trading plan, but not so for a novice or beginner trader, as it requires immense discipline and repetition. But traders should not lose heart, as experience and spending time in the market teaches its nuances. Moreover, the trader should never drop his guard, as even when the trader is able to do enough repetitions and had incorporated the same as part of his trading rules and strategies, remember, market has its ways of surprising even an experienced trader. Greed is so deeply rooted in our consciousness that it cannot be completely uprooted from our psyche and is bound to resurface time and again in live market. Only thing that matters is to keep correcting your course.